Hello there everyone, just to follow up from yesterday's budget, I want to talk today about full expensing relief, which was gained a lot of press. CBI's come out and said this is a great thing, wonderful, a good tax measure. But let me tell you today why for 99% of companies in the UK, it doesn't mean anything. It means diddly squat, and it's not a big deal at all. So let me explain, right? The rationale behind this was to say, look, to appease all of the FTSE 100 companies and the big listed companies, which account for about 1% of all companies in the UK, who we've known about this hike in the rate of corporation tax from 19 to 25. It's been going to be coming in for a while now, and everyone was kicking off. So to basically counter that increase, to soften the blow, as it were, the Chancellor announced yesterday, he said, look, the amount of kit that you can buy, equipment, plant and machinery, unlimited, and get immediate tax write-off for 3 years, which goes a long way to offset the increase in the rate of corporation tax from 19 to 25, but only for the big players. The vast majority of SMEs will not gain in the same way as those multinationals. Let me show you why. So let's just take an example. SME business doing okay, it's doing all right, making a few quid, £300,000 before we consider its capital expenditure. Now let's just assume if you've got a business and you're making 300 grand of profit as an SME, you're not going to be spending millions of pounds on capital machinery. Let's just assume, pick a random figure, say 50 grand, right? 50 grand capital spend. That seems a sensible amount for a firm that size. So profit 300, but they've spent 50 grand on expenditure. So the rule that was already in place, this is the thing, forget yesterday's announcement heralding the full deduction. What was already in place anyway said he could have full deduction up to £1 million, immediate tax write-off. That was already in place, right? So we knew about that. So this particular company, this SME, and thousands more like it, 50 grand, full thing, comes off the tax bill. Very good. So what are we left with? We're left with profit, taxable profit, 250 grand. 300 less 50 grand of machinery, 250 grand. But now we've got this hike in the corporation tax rate, which kicks in at this level, 25%. It's not 19% anymore, it's 25%. So the tax bill, 62,500, 25% on £250,000 taxable profit. What was it before? So we're trying to compare to how worse off we are under the new hike in the tax. So before the change in the tax rate, when it was still 19%, 250,000 profit, 47,500 in tax. So this SME business, which is typical of thousands and thousands across the UK, the vast majority of all companies are SMEs, they're stung for extra corporation tax, 15 grand on these numbers. Yikes. Now, as a percentage increase in tax, that's massive. An extra 15,000 going from 47,500 tax to 62.5 is 31%. They are paying 31% more tax under the new regime, which is a bad. It's not good in anyone's books. Regardless of what the Chancellor did to appease the big companies, this has done diddly squat for the vast majority of companies, the SMEs, because no one's going to get, or very few are going to get, beyond the limits for full expensing that were announced yesterday, where it's more generous. So let me explain that one. So here we've got a multinational company that is making £100 million profit before we consider its capital expenditure. So now under the new rules announced yesterday, everything that it spends for 3 years on capital equipment, full expensing relief, 17 million, just assume 17 million. Basically, it's just a random figure, but I kind of said, look, if they're doing a sixth of their profit, assume these guys are as well. So 17 million expenditure, right? Under the new regime, the whole lot, 17 million deductible against tax, which is great. So they've got taxable profits, 83 million, but the rub is that they've got to pay a higher tax rate of 25% instead of 19, whereas before they never got full relief for that. So the kind of quid pro quo is you're going to get big relief here, but we're going to hit you for a higher rate. And that is 25%, 83 mil, which works out at 20.8 million. Okay? Now, again, we've got to consider what was life like under the old regime. So, under the old regime, like I said, they would have had the first $1 million of capital expenditure tax-free, but the balance, 16 mil, would have been written down over time, depending on the type of capital equipment, assuming that the main pool, as we call it, for tax relief is 18%. So you get 18% a year over several years, reducing down. So if the old rules had stuck in place, which means that you don't get immediate write-off for this 17 million on kit and machinery, but you do have a lower rate of tax, their tax bill would have been 18.3 million. So under the new regime, this large multinational has gone from paying 18.3 million of tax to 20.8 million of tax. So they've increased their tax bill an extra 2.5 million. But here's the thing, as a proportion, they've only suffered 13%, 13% increase in their tax bill from 18.3 to 20.8 million, 13%. Whereas the SMEs suffered 31%. So they're shouldering all the burden, all the pain, as it were, of this new regime here. The guys in the city, the FTSE 100s, everything else, they've been appeased by this, but this won't affect all these because the vast majority of SMEs would have never have got to £1 million of expenditure anyway, to then go beyond it to make it, to soften the blow of the increase in the rate. So this is why got to take all these things with a pinch of salt. And yes, there's been a lot of positive stuff in the press about this for the big players, and of course it is. It's hopefully it will attract more investment in the UK. It won't put companies off that we're not going to go over to Ireland or elsewhere where there's a low tax regime where the underlying rate is lower than 19, because you've got this full expensing relief on equipment for 3 years. But for SMEs, doesn't mean squat, because they're never going to get to that limit anyway. And as you can see in my numbers, they are disproportionately worse off. So let's hope that 25% rate has a limited shelf life, but who knows? Who knows? If you like this video, please do subscribe, and as always, I'll see you soon.